Welcome to the Aramir Trading Group 1 meeting. Today is the 4th of September, 2018, day after Labor Day. So welcome everyone. It looks like we had a little bit of a sell-off earlier this morning, and then it's kind of recovered. Futures are down 3.5. Did you see what was in the news? Was it the trade agreement?
I'm not sure if it was that or if it was the Kavanaugh hearing. I didn't see any news about the trade agreement. Maybe I missed it.
Okay, well, I saw that they said that there wasn't a deal yet, but the president said that they're going to have one. So I don't know. Typical news-driven market.
Right. Yeah.
Let's see. I see Bruno's here. Hey, Bruno. How's the coding war going?
Hi, Tom. The Excel version is finished, and I'm working now on the Excel version. I'm working on the vol surface, and I'm working now also, of course, on the standalone application. Yeah, it's going well. I mean, I'm quite happy. Yeah. Maybe I can. Oh, I mean, I've showed so much of it already. I'm not sure people are interested in seeing my Excel stuff.
Yeah, I think people are always curious, and especially if you just finished it, it's maybe time to show it off a little bit.
Yeah, okay. Where is it? Because again, I'm right. I was in the middle of option view. I still have one trade waiting for a fill. Okay, let me share my screen. There it is. Okay. Now, Excel. Okay, there it is. Yeah, so on Excel, yeah, it's finished. I've cleaned up. Now we only have just a few tabs. All the ancillary stuff is there. So if you want to check your rates and update your rates for proper Black-Scholes, it's done here. Something that's quite important, I think, is to, and it is actually used in the other spreadsheet, is that you can request your executions here per trade, per expiration. You copy into the clipboard, you save it as a CSV, and as you're going to see now on the other spreadsheet, you can import it, and then it calculates the cash flow automatically for the position. So it's quite useful. Historical Black-Scholes, yeah, Black-Scholes. I mean, I've cleaned it up, so it's working beautifully. I've added two possibilities. You can have there's just a plain Black-Scholes just to play around and do your theoretical pricing. You can use IB volatility or the calculated volatility, and something which I mentioned last week or in previous weeks is that I have now implemented the dividend-free substitute to the underlying. So if you use what I call the UDiv, it's actually a simpler model because you don't have to really worry about dividend distribution or the present value of dividends. It's basically taken off the equation, which is quite handy. So the calculations are actually pretty good. For example, here the theoretical price for a 2850 September call option 60, and the bid at the moment is 69, our 60.5. So the distance theoretical versus the actual market price is still very much in the same ballpark. So it's doing well. For those who want to learn more about Black-Scholes, I've implemented the reverse IV calculation. So basically, if you put in an options price, it reverse engineers the closed equation to actually figure out what the actual volatility is. So those things can be handy for people who want to learn about pricing. What I've done the most recently, I mean, the pricer now can have up to 20 strikes, and you can, I think I showed that in previous presentations, you can actually do your simulations here, and then you click on adjust to actually add it to your main position, then you confirm or cancel. So it's quite useful. So I think the pricer is done. I mean, the only thing now will be for me internally to add to this stickers page more vol surface stuff. But I think for as far as this data capture and basic calculation piece of software, I mean, this is done. So the next step is to move on to the other spreadsheet, so which I called BMO. I called BMO last. So basically, the dashboard is copied automatically from the pricer, the Bebop pricer. So, for example, here, if I want to go to the position is also copied from the pricer page on the other spreadsheet. So you don't have to do anything. You put your strategy, your trade in the other one. It is copied automatically, and you just go back here. You click calculation, and then you can check your position. So this is a sample RTT, 13 lines. Of course, that's way too many, but it's actually quite beautiful. You can also have a look at it in 3D. So it's something that I don't think not many platforms have. You can calculate your Greeks, and all the calculations are done in the background, but if you want to double check, and all the calculations are automatically copied onto the spreadsheet. So, for example, the P&L here for an underlying, it sets SPX from 2630 to 3216, and here the 13 projections up to expiration. They're all here. So what I've added actually, because if you look at, I mean, what I've added is that now you can actually give a name to each leg, each strike, so that you can, if you have a complex position and you want to check, for example, what the core broken butterfly is doing, you will just select these three, and for example, not these three upside hedges. Actually, these ones have been reset to 0, so they won't play a role. But for you then go here to parameters, and let's say I just want to see what my position will be doing in the next 15 days. I just recalc, and if I go now to position, I will only have the next 5 lines. You know, so it's quite, and the same for the position in 3D. Oops, there should be something wrong here. That should not be that, or maybe it is, I don't know. So this is what it is. So you go back to parameters. As you select, if you just want one line, just recalc for one line. You go to position, and you should have one line. So there's a lot you can do in Excel. I know it's going to be a lot better on the standalone application, but as far as calculations are concerned, it's pretty good. So as I said earlier, because now you can name, I'm going to reset. You can name your for example, here it's a broken butterfly, and one strike I called low long, then the shorts, and then the upper long. Let's say I want just to play with, I just want to see what the position would look like without the upper long. I then recalc. If I look at the position, of course, now without the upper long, it basically looks like a PCS, where actually 2 shorts for 1 long. So that's why it's actually dropping very fast. So overall, I would say it's quite flexible, and I can do a lot of things already. I've also added a Greeks page. So for example, here, this is the T+0 as of today. And you say you want to see your Greeks at T+10, for example. And it will automatically recalc for T+10 or T. Well, maybe there's something wrong with the calculation. Oh no, it's there. Yeah. T+10. I mean, this kind of thing can be a little bit slowed down when you've got a feeder actually feeding this spreadsheet live with live data. So this is something you probably do once a day, or. So here we have the P&L, the delta, with some conditional formatting to show where your delta is going positive, for example, according to alert levels you put in here. So if you want to have an alert when delta is above 0, 0 plus 1, the conditional formatting will highlight the cells here. Yeah, 0.1 actually. So I think it's quite readable. And here the Greeks, maybe it's a bit too much on one chart, but so that's basically it. So I'm releasing it as is, and I'm passing on all the calculation stuff to my partner to now do the standalone version of this. And of course, there will be a lot more. There will be support for TOS and probably for Trady as well. And of course, it's going to be a lot easier to use on a standalone application. But I think for a beginner's tool, I think it's, in my view, it's still pretty good.
It looks really nice.
Yeah, you can really, yes?
Have you looked into incorporating weighted vega into the model?
Yes. Yeah. The calculations I haven't implemented, but weighted vega will be there. Yes, it's actually already in the data model. All those things are recorded, and for each strike, you can actually. I could put it for the whole structure or the whole trade, but in case, for example, you have calendars and you just want to apply the weighted vega on a long leg, especially if it's a campaign calendar where your long leg is far away. So basically, yes, it's going to be made available strike per strike. Yeah.
I mean, that alone will make it a lot more reliable than what's out there right now. Yeah,
of course. Yes. Now, the calculation is easy. At least the approximation most people use actually most often on Excel. So I could have actually implemented already. I mean, it's going to be done the next few days. At this time, I've just sent it to be tested. So for the whole month of September, it's going to be some bug fixes, but this I can add anytime. It's quite easy to put on.
So Bruno, if somebody opened up the spreadsheet for the first time, could you walk them through how they would use it?
Yes, of course. And I also recorded a few videos on my YouTube channel. But, and but also, of course, you start with the feeder. That's the first thing to do. So the only difficulties people have had so far, because of course, if you already have option view uses for interactive brokers the same data feed technique. So if you have option view, or if you ever had option view in the past, and the TWS control is still on the machine, this spreadsheet will work immediately. Otherwise, there's an extra procedure which I've explained on the video. But otherwise, it's quite simple. I mean, if I disconnect here. So let's assume now that the software is properly installed. So basically, you have to register the tws.ocx on your Windows machine. You just connect. Boom, it's connected. Then you go to option chain. For those who don't want to overload the TWS with too many data requests, it is possible to then select, I just want the puts for September, for example, and request for that option chain. But most of the time, people want just to request data for everything. I still limit the number of strikes here to 10% OTM. So that's why it skips quite a number of strikes to now concentrate to the range 2665 to 2625 to 2975, which is good enough. And then it starts calculating everything. So basically, once it's properly set up, one button to connect, and then one button to request all data. And then your pricer is already operational. So you can start adding, let's say I want to add, let's say a short PCS here, 2825, 2850. It will recalculate. So there it is. And of course, it's fed automatically to, or I could have used, oh no, you know what? I'm going to use, let's look at this. Since I've got that simulation thing, let's imagine we have a 2825 minus 1 and 2850, 1, and then 0. Actually, I'm going to delete this. Okay. So let's have a look. If there's no bug, if I just press adjust, where is it? Oh, where is it?
Did you?
Oh, there it is. There it is. Yeah, yeah. So the PCS is automatically added. If I confirm, it should to make sure you don't apply the adjustment twice. It should clear these figures. So this table is automatically copied there. So it's going to refresh anytime. Okay, there it is. So for example, here I'm going to call it PCS long, PCS short, whatever. So of course I should, if I assume I've actually placed that PCS, I should have actually requested the executions over there and imported here to have the proper P&L. That's of course. I mean, so the P&L will be wrong because this P&L is only calculated. But this is just a quick tour. So if I now go back to the dashboard and I look at my position, it's going to update it now. I think there's too many things running on my machine. There are too many things. Oh no, I didn't recalc. Sorry. I do need to recalc. Yeah, there it is. Yeah, it's my fault. So, oh, that looks wrong. So there may be still, maybe I put the PCS on the other side. But basically, that's what it is. So as I said, for this coming few weeks, I'm going to test all those features and calculations. And the best way to actually check is to go to parameters. Just reset. Let me see if I put on the PCS correctly. So now it should be recalculating only for the PCS. Yeah, I put in the other way around. Yeah, my mistake.
Debit spread. Yeah.
Yeah, I put debit spread. Yeah, yeah. That's exactly that kind of thing that happens when you do a presentation without being properly prepared. Yeah, it's a put debit spread. Yeah. So I should go back here. Yeah, it's a put debit spread. Silly me. Yeah. So that now it should work. Okay, if I go back a recalc, let me see if my position has been imported properly. Yeah, there it is. So now I think it's been recalced, so it should look better. Yeah, that's more like it. I will probably add ways to select only some strikes and maybe select the range you want to look at, because it doesn't look that great here. But at least the calculations are correct. If I go to parameters and I recalc only for this too, it should now look at like a normal PCS. Yeah, that's right. I go back to parameters, I reset for everything, recalc, position. Yeah, still something wrong here. Or maybe it's right. No. Oh no, it's not calculated. I'm just going too fast. Okay, that's a quick tour. If anyone wants to know more about it, I mean, it's the test version is already available, and I would be happy to discuss and fix a few bugs here or there.
How do you want people to get that? Do you want to put a post in the forum with a download link, or some other way?
At the moment, the only people I've talked about it are on my Slack group and on my Rhino group. But yes, that's a good thing. Yes, I'm going to put a download link on the forum. Yeah.
Okay.
Yeah, that's probably the best way to deal with it. Yes.
And then it's easy to keep it updated, and people will see the updates.
Yeah.
Well, it's looking good, Bruno.
Yeah. I mean, for Excel, it's not too bad. Yeah. It's not too bad.
You certainly have all the modeling worked out, so I think the standalone application shouldn't be too difficult to code. Famous last words, right?
Yes, EIO works okay. In terms of vol model, I've used what I said earlier, either the dividend-free substitute, which will be easier to build a vol surface from. So if I go back to the other one, and on the tickers page. So the model is what I call a dy drift. So the dy drift is, I still haven't found a personal use for it, but if you use a dy drift, it will calculate how dividend is being priced in. And if you look at the dividend, this is the impact of dividends across the option chain. So you can see that the short-term puts below 2,800 basically do not discount any dividend. It's like there was no dividend. For October, it looks fairly linear. So I'm pretty sure I could model something, but these curves are still a little bit too volatile. So that's why I'm keeping it. And I would like to see how it behaves when it's earnings season, to see whether the pricing changes or how dividends are being priced in changes. So it could be interesting. That's why I'm leaving it there. But in terms of building a vol surface, it's more complicated. So yeah, there are lots of calculations in the background. This is the IV graph. So this, you can see the smirk already. And I will also, of course, add more expirations. In this test version, I've only enabled 2 expirations, but in the code, I have added 4 or more. So there will be 4 or 5 as many expirations as you want, because basically I will need more expirations to calculate the vol surface. I mean, I can use VIX data as a proxy, but I think it will work better if I work on actual volatility figures. So the next versions will have 3, 4, 5 expirations. And I will add also weeklies, month end. At the moment, they're only the regular month and the month end. I have not implemented the weeklies yet. But there's also a limit to what I'm going to do for Excel. I still want to keep the good stuff for the standalone application later on.
And did your programmer partner, is he back from vacation? Has he started coding now?
Yes, yeah. And the first thing he told me is that, because I gave him this and the code, he said, well, don't distribute that. I mean, he doesn't want this to, cannibalize the future product. But I think it's if I can sell a few, great. But I mean, I don't expect a huge success from this. Maybe as an appetizer for the bigger one, yeah. But there are of course limitations with Excel, so I can't go too far with Excel. As you can see, sometimes the refresh is a bit slow, so I'm not going to add too many features. Maybe it's going to be too heavy. The vol surface calculations will be too heavy. I don't know. So I'll see. The other possibility, of course, is to put this feeder on a server and feed a database. There may be a slight delay, but we're not like scalpers, trading tick by tick. So the other possibility, yes, is to put this on a server and feed the database, and then the other spreadsheet or the other program will draw data straight from the database and not from IB. So that would also be a lot easier to centralize the data capture. Yeah. So that's something we're working on as well.
Yeah, you just have to be careful with licensing and redistributing data.
Yeah. So yeah, that's the problem. But that said, I will only distribute to people who already trade on IB, for example, or TOS.
Right.
So I'm sure there's a way to circumvent that limitation. As a matter of fact, I'm not even allowed to distribute anything based on the IB API. That's why in one of my videos I said, well, download the API, even if you don't use it, and just pretend this is your own stuff. That's my way to look at it for now. Yeah.
Oh, and then George says, do the calculations in C++, and if you need more power, use the GPU.
Yeah. I used to be a C++ programmer, but I'm actually now fancying coding everything in C#. Yeah. It should be fast enough. Yeah. VBA is okay for this type of prototyping, but I will move on to C#. And probably I can also plug in MATLAB. I do have a lot of modeling stuff in MATLAB, but I'll see. I mean, I can't tell you exactly what will be inside, but of course I'll be open and transparent. I mean, if anyone comes with questions or suggestions, that's what I said the other week, the other day. I mean, at least it will differ from the rest by not being a black box. I will explain everything that is inside. So as a learning tool, I think it's quite valuable.
So are the model calculations, or those are all in Excel? They're not like in a DLL or anything?
I could easily put them in a DLL, but
They might keep your programmer friend happier.
Yeah, I mean, I mean, I don't want to boast, but it's actually simple stuff in terms of equations. What I've coded is quite simple, really. And I wanted to make for example, here I calculate the delta. I wanted to make sure that anyone who wants to learn and build, if you want to add Vega here, you just, it's the same type of function. Of course, I could make it also in C++ and call it from Excel, but I made it simple. So if you want to code your own Vega here, option Vega, all the Greeks, everything is available straight. So that's where an Excel tool is more flexible. I mean, people are willing and to learn, and they want to build their own thing on top of this. They can easily. And I will add more Greeks. For one of my strategies I'm working on, I will need the charm. So I will calculate the charm, and some people want the Verma. I can also add the Verma. I mean, it's not complicated. At the moment, I've got just the basic Greeks, delta, gamma, vega, theta. So that's why I want to keep it relatively open and flexible, so that if people want to build on it, they still can.
Oh, that's great, Bruno. You've done a really nice job.
Yeah, I remember the first time I talked about it, I said, no, it's easy. I just spent a few days, and now it's been hard work for the last 2 months, but I'm happy about it. Yeah. And you spend a lot of time on details. I mean, it's crazy. Yeah. Anyway, that's what it is now. And of course, I will explain. Well, this is the IV curve data, because I think I said, I don't want to say too long. I mean, I'm sure other people would like to take over and talk. But if you look at the IV curve I showed on the other spreadsheets, you can actually do a linear regression, and it works even better for long-dated, put side, and relatively OTM. So you can actually work out a regression line starting on the ATM IV, and you basically draw a line like 1.3% per 25 points. And so you can actually plot a line, and it will be not far from the market price. So it actually works pretty well. Yeah, and this will also be easier to project over time because of its linearity. That's it for now. Otherwise, in terms of trades,
I was going to say, any updates on your rhinos?
The Rhino. My September Rhino is not doing fantastic, but it's very safe. I'm just hoping it's going to fall back slowly. But if not, I've actually placed an order to close the upside hedge. Basically, I'm winding it down. And if I wind it down, I will break even. So not going to be a great month, but at least I can make I will not lose on this one. I can maybe add a few PCS or PCS rolls. I mean, there are so many support levels all the way to 2800 that this trade is safe, doesn't take much attention. And I have entered, let's make clear this. And I've entered today a Rhino on SPX, on November SPX. So this is my new entry. And I have resumed the Rhino on the Russell. So I also have, let me close this. I've also, for the first time in a year, I have actually now, and I must clean up my, okay, there it is. For over a year, I had not traded it on the Russell, so this is it on, oh, one can't be that wrong. Oh, this is strange. I thought I should, probably I got a very bad entry price. This is strange. Because this, oh, well, it's not so bad. So this is the new trade I've just entered. But the market makers were not biting, so I gave in probably too much. It looked okay at 275, 280 a piece, and I ended up paying 295. So maybe, but otherwise it's a perfect position to be. I mean, from the upper longs to the shorts, so that's cool. So this is my, but I don't understand why I'm losing money on this one.
So why did you finally switch or put a new Russell trade on? Was there a trigger?
Well, the trigger is that I don't trust the modeling on SPX. So I thought, and we had a discussion last week with Dan that he said that on the Russell, the OV still seems to be doing a better job. So that's why I'm actually now going back just to give it a try and see whether I can. Let's have a look at EIO. I don't understand why the P&L is so low. I just entered. But probably here as well. Maybe my delta is probably not as strong as the variable mode is showing. Yeah, there must be something like that. Plus my entry that was, I probably paid a bit too much for it. So yes, I want to see, because of course I'm going to test also on my own modeling Russell and SPX. I just wanted to get back, not only to see whether trading on the Russell is easier than the SPX, but also to have a better understanding of the different vol surface dynamics. Yeah. That's it for now. Maybe, are there maybe some questions?
I don't see any questions. If anybody has any, feel free to speak up or type them in the chat.
Maybe they've fallen asleep.
I don't think so. They're all still here. So
okay. Okay. So let me give you the screen back. Well, where's that?
Are you still looking at maybe November timeframe for your alpha / beta?
No. I'm too busy, so I've decided to stay a bit longer.
Oh no, not for your moving. The for the standalone initial like alpha beta testing.
I'm not sure. I'll have to see whether he's programming as fast as he said he would. So I don't know. I think maybe some alpha, yes, because he's already showed me some stuff. So, and considering most of the calculations, if it's as plug and play as he says, yes, that could be. That we could have at least an alpha release or something to show, and maybe a call for features requests and stuff like that. Maybe as early as November, yes. But to be honest, I think. A reliable release will take probably another 3 months.
Right.
Okay.
Well, yeah, I don't see any questions. So, oh wait, there is one from George. How do you use Charm and Vama to increase the performance and risk control?
It's been a bit of a side project because I'm too busy, but. I have added Charm to control risk on trades that are like the weirdo, which are less immune to sharp falls. So if you only have a delta and you don't look at gamma is one thing, but gamma is a derivative to the underlying, not time. So the charm can actually be an additional tool to gamma to figure out how quickly your delta can actually turn positive to very positive. So that's a rule for my own personal weirdo. And Voma, well, I'm not really using it, but I've seen and heard a number of traders using Voma, which is basically a second order derivative for Vega. So for the same reason, to see how quickly your Vega goes against you.
And Tim asked, did you think about a toss feed? I think I heard you mention toss.
I've had two feedbacks from guys who want to help me with toss. So I'd rather actually let others plug in the RTT calls on my spreadsheet, and then we'll take it from there. I don't think it's going to be a lot of work. Maybe, of course, for the feed as such, it should be okay. Now to request executions and importing your previous P&L into the other spreadsheet, those things I'm not too sure how to deal with on TOS. And some people told me that the REST API is more reliable than the regular RTD calls. So, but again, I'm in contact with one or two guys who have done a lot of coding. So again, if I can maybe delegate that would be better. Otherwise, my partner will have to deal with that.
Right. All right. I
Sorry,
think that's it for the questions.
I've spoken a bit too long. Yeah, but thank you.
No, it's good. Anytime there's good information like this, it's always good to let you keep talking. So.
Yeah, and as soon as I've got a bit of time for people like me who are interested in the vol surface dynamics, I will prepare a roundtable and discuss the practitioners' Black-Scholes, which is basically what I'm doing, which is an evolution of the basic Black-Scholes that everybody knows doesn't work. And I will talk also about the Heston model and a few variations. I think it's maybe an advanced topic, but I'm sure it will be of interest to a few of you.
Well, great.
Yeah. So I see Gary's.
Gary says he has interest. Okay.
I know. We chat at least once or twice a week. I know he's very keen. Yeah. But the math are a bit complicated, so I'll try and keep it fairly easy. Yeah. But Heston is theoretically a lot more reliable than Black-Scholes, even if you tweak it the way a lot of people do. It does stick to vol behavior better than whatever you can do on Black-Scholes. You can push the envelope, but Black-Scholes is Black-Scholes. And of course Heston also has its limits. But of course platforms like Option View and maybe one and maybe others don't say a word about the vol surface analytics. That's what I will try and make different, because I will be open about it. But I suspect they use Heston. Heston is basically the benchmark. Yeah. So at least by shedding some light on Heston, it will maybe help people understand how their platform works.
Well, very cool.
Yeah.
So what should we talk about next?
Tom, this is not actually related to what we'll talk about next, but the PowerPoint that you sent me for the roundtable, I didn't actually see any slides on layering, so maybe I have the wrong set.
Oh, Maybe I forgot to save it. Let me,
I mean, I'm sure it's fine
yeah, it's slide
because we have talked about
6262.
it.
Yeah.
We've talked about it, so it's no problem.
Yeah. Okay.
Well, I can just, since I just now came on, first of all, Bruno, thank you very much. That was very impressive. And I mean very impressive. I have to say, much of it was, as they say, somewhat above my pay grade. But I think it will be extremely useful. And if you can get a Thinkorswim feed, that would even be wonderful because while I have IB, I don't routinely use it. But very impressive, and thanks for all the hard work.
Thank you.
I was just going to mention that I think it's important for everybody who's not I'm really familiar with using expected moves to try to plan your trades and adjustments. It's pretty easy to build a spreadsheet that you can drop them in, and if you have a platform like Thinkorswim, which will automatically calculate the expected moves, and they don't exactly they won't tell the exact calculations apparently. The expected move will be similar to the range that's calculated from the IV, but not identical. But anyway, it's just a good idea for everybody to become really familiar with that. I use it all the time. You can also use it to set up some trades, like, for example, out of the money bearish butterflies, which I trade very frequently, and they either hit or they don't hit. You're probably not going to pin one, but if you get fairly close, you'll obviously have a phenomenal yield because these are usually launched at like a nickel or a dime or 15 cents. And if the market goes the other way, okay, you've lost your 15 bucks if you had a one lot. But things like that are examples of the utility of calculating expected moves. And I look at them and I continually update them for my road trip trade cycles. So not just at trade launch, which obviously I use, the expected move. I like to see the lower long put be roughly very close to the downside expected move. I just now launched the 16th of November while Bruno was talking, and I noticed that fit pretty well. But anyway, I not only use them at trade launch, but I will continually, once or twice a week, I'll get an update and I'll plug that into my spreadsheet and I'll see how I'm doing. And that can give some very useful information. So that was all I wanted to say on that, Tom.
Well, just wondering if you want to, is there a expected move calculation someplace other than the Thinkorswim for those who don't use Thinkorswim?
From what I understand, some but not all platforms will have it.
It's actually very easy to implement. Sorry to interrupt. I will definitely add that. It's a very simple calculation.
Oh, wonderful! Yeah.
Yeah.
So yeah, I mean, I could certainly show my spreadsheet, and it's. Yeah. I mean, it's nothing. I mean, it's just. You know me, I'm not a great spreadsheet writer. It's just ridiculously simple but useful.
Well,
So
I'd be curious to see how you use it, Dan.
Yeah. Okay. So let's see. I will share this. So should be able to see it, right?
Yep.
So okay. So first of all, Thinkorswim will show the expected moves for each of the cycles, and these are current. You can see them changing. So I will update these once or twice a week, and I use them at trade launch, of course. And I just now modified my spreadsheet, so I don't really have all the launches So I actually need to get the one for 16 November that I just now did. So that was roughly 28.93, and it has an expected move, as you can see over here, of 159.3, and I'm going to use the IV of 15.31%. And again, if you do the usual calculation for standard deviation with this number of DTEs, it's not going to match up exactly this expected move. You know, Thinkorswim apparently thinks they have some secret sauce on this, and maybe they do, I don't know. But so you just so you plug this in, and I haven't, as I say, I haven't actually done the calculations because I just now added this section. But this is what I already had, and so I just will come in and update these, you know, once or twice a week, and I'll get the range low and range high, and I want to see where my short strikes and where the current market is with respect to these lows and highs. That gives me a lot of information. And as you can see, I just now added the 16 November, and my short strike. Let me show this. I just now did this while Bruno was talking. My short strike is 27.95, so I just add that in because over here I have a calculation of the distance from the short strike, and you can see on the shorter dated cycles, you can see how much we've moved up from the short strike and from the SPX at launch. And so anyway, you put this in, it's very simple. And anybody can write this. As I say, I'm not a coder. But the way that I use it is, again, I like to see, where the road trip trade footprint fits over this. So, for example, 27.35 is the low range, and there is 27.35. So you can see that I like to have the lower break even. I think I said lower long put. I meant to say the lower break even near the lower range of the expected move. This tells me that I'm more or less in the ballpark. Using the entry tool or the G tool, that's the way I arrive at the short strike, of course. And then I will sometimes, as Tom does, will vary the strikes from the G tool, like I did today. I took Gary's G tool and modified it a bit. But I like to see the break even sitting near the lower range of the expected move, and then I use the upper range if I'm going to add a call credit spread like I did on this one. The upper range, as you can see, was 30.50, and I don't like to get too close, so I added the 30.50, 30.55 just to balance out my deltas a little bit. And so I'm starting nearly delta neutral with good Greeks all across. So that's the way that I use it, and then on a weekly or on an intermittent basis, I should say. So for example, if we were to look at my 28th of September, and this is the class position, by the way, not my other accounts. So for the 28th September, you have to go, pardon me, you have to go in and get the new calculation for expected move, and which is 80.56. So you just drop this in, And then this again will give you your range and all the other information and how far your distance is, etc. So for example, for this one, the low range of expected move is at 2811, 2810, which is way down here. So this tells me that, well, clearly this, I already took one of these out this morning because I've made all I'm going to make on this, and I was able to take off a little bit for a small profit. But 2810, this tells me that most of what is actively going on, I'm within that expected move range. So that then leads me to be more likely to let this thing run. Clearly, if we started moving down towards the expected move range, I am, probably going to try to do something defensive. So that's really all I had to say about it, Tom. It's just a useful trick, and it's easy to do.
It looks good, Dan. And Bruno, you said the calculation's pretty easy. How is that different than the standard deviation calculation?
Sorry, I was busy working.
Oh, no problem.
But the projections are basically the underlying, the IV calculated for that strike, and for you can use IV, ATM IV, or any IV you want, if you want, or do a regression to actually try. I mean, okay, the simplest way is ATM IV, the underlying and the time. So it's a fairly simple calculation.
Well, the interesting thing, though, Bruno, let me just, for example, show the one here on September the 28th. So if you look up here, this is the 68. I mean, this is the one standard deviation using Thinkorswim's model. And you see it isn't the 2810 for the lower range that I got from using their expected move. They have a secret sauce for that expected move calculation, and they do not tell you what that is. Now, I don't know that it's any better, but it is different. The only thing I can say is that one other site, which I won't name because I have sort of a policy of avoiding any litigation at all costs. One other site shows, or I should say they actually have an indicator that shows the percentage of time that the expected move sits within the range, or the market movement sits within the range of expected move. And it is a phenomenally high number, like, 70, 75% of the time. And of course, you would expect this really because of the tremendous volume of the SPX, which is a big product. I mean, if you take the SPX and the SPY together, and don't even include VIX and VXX and all that, which are basically derivatives, the SPX basically moves the market. And that's the reason why very frequently you will pin that expected move. It'll go right, it'll go right to it. But even when it doesn't, at least 70% of the time, it's going to be within that range. And so the expected move that they use to derive these stats are their expected move, not these that are based on the standard calculation. So I think that's why they claim they have some secret sauce.
Okay. I'll need to look into it.
They're not going to tell you.
No, but it looks like they're using something like stochastic volatility, or the distribution of volatility.
That would be that was actually my guess, but
I found this link on Tasty Trade of expected move, and they explain a little bit how they calculate it, or different ways to calculate it.
Oh, okay. So anyway, I'll go ahead and stop sharing unless anybody had any other questions that I needed to show something.
Somebody asked if they could get a copy of your spreadsheet.
You know, unfortunately, I don't usually send those out. I might, once I get this thing done, if I may send out this portion right in here, which is what you want, I guess. Yeah, once I fill these in, I can send that out. I mean, it's very simple because it has to be simple because if it were complex, I couldn't write it. I'll put it that way. So this is easily done, but I can put that on the website.
And Gary said, I think expected move may be the 50% points, not one standard deviation. Hey, Gary, can you talk? Can you explain that a little bit?
Not exactly, Gary. They're not exactly the 50% points either.
Okay, and then David asked, how accurate is it to calculate expected move by adding the at the money call and put option prices?
Quite accurate. If you just calculate the straddle, you'll be close.
And I think that's actually one of the methods that they had on that Tasty Trade page.
Yeah. Well, that's, I believe, the standard method, and it's very close. I mean, you'll only be maybe 2, 3, 4, 5 off from Thinkorswim's expected move.
Right.
Yeah. Can you hear me?
Yep.
I can.
Yeah, I think like that. I looked into this at one point in time. I never came to any solid conclusions. I currently don't use it, but I have thought a lot about it. But you know, not enough to actually implement it. So I'm kind of looking forward to what Bruno may, when he gets enough interest in it, how he pursues it. But one of the things, like with that Tasty Trade, they take. It looks like it's the at the money vols, and then they take some kind of a fudge factor, right? Like the 85%. And it's kind of, but it's unclear exactly what the point is of that. I think they do some like hand grenades and horseshoes type of a thing to kind of get close, but it may be okay.
Well, my feeling is, Gary, that regardless of what, you know, whether you use the straddle prices or whatever, I just think that due to the size of the product, that is the size of SPX itself and the volume of SPX and the relative frequency with which the expected move will frequently, I mean, be right on it. It'll pin it. I think it's important for road trip traders anyway, and I guess, you know, equity traders as well, to, you know, to be familiar with this and to use it, because for larger products, you know, even equity products, you know, Tesla and, you know, Amazon and all that, even though they're very small relative to the volume of the SPX and the size of the SPX, still the market will often attempt to pin that expected move. So I use that when I'm doing my synthetic covered calls, and I use it if I'm selling a credit spread. You know, I want to know where that expected move is, and I may come in front of it a little bit, but I want to know where it is. And the same thing for example, a risk reversal trade. You can use that, you know, to help you place the strikes for a risk reversal trade. You know, you want to come in a little bit in front of it, but you don't want to be too far in front of it because the market may try to pin it. So anyway, that was all I had, Tom. So let me go ahead and stop my sharing here and let somebody else.
Appreciate it, Dan.
Okay.
Well, we're right at an hour, so it's probably a good time to end the meeting. A good discussion on expected move. I put a link to that Tasty Trade page on the meeting description for when you look at the archives. And Bruno, your spreadsheet's looking great. Really, can't say well done, good enough. It's it really looks nice.
Thank you.
And Dan and I will be on tomorrow with the roundtable, and I actually bumped up the number of people we can have on it, so there shouldn't be any problem with people getting on now. So that's at 11 o'clock Eastern tomorrow.
And I have looked at Tom's PowerPoint, and it's a wonderful presentation. He has basically covered everything that we do. Definitely, captured all the key ingredients. So, tomorrow, Tom's going to run the show, and I'll be there and maybe make a comment or two. But I would encourage anybody, particularly a newer road trip trade people, or people who may be tuning in to this particular trading group and are not road trip members, tune in and see how it works.
Right. Should be fun. All right, everyone. Have a great day trading, and hopefully we'll see you tomorrow. So thanks.
Thanks, Tom.